The Bank of Ghana, BoG, has reported an increase in the investment price of its gold coins as of October 9, 2025, despite the ongoing depreciation of the Ghanaian Cedi on the interbank market. The gold coins, introduced by the BoG, are part of a strategic initiative to reduce the hoarding of US dollars and manage excess liquidity, aiming to stabilize the Cedi against major foreign currencies. The updated prices for the gold coins are GH cent 13,525.01 for the 0.25 ounces coin, GH cent 26,264.78 for the 0.50 ounces coin, and GH cent 51,794.89 for the 1.00 ounces coin. These coins can be acquired through commercial banks and are available in 3 denominations. The introduction of the Ghana gold coin is a significant move by the central bank to address currency depreciation issues by promoting gold as an investment alternative. By doing so, the BoG hopes to strengthen the Cedi by reducing reliance on foreign currencies, particularly the US dollar. This strategy could potentially enhance market confidence in the Cedi and stabilize the local economy by curbing inflationary pressures associated with currency depreciation. The success of this initiative will likely depend on the market's acceptance of gold coins as a viable investment and the BoG's ability to manage currency supply effectively.
The Jakarta Composite Index, IHSG, closed 1.04% higher at 8,250.94, primarily driven by the strong performance in the transportation and logistics sector, which rose by 3.11%. This sectoral strength contributed to the overall positive sentiment in the market, with the LQ45 index, which tracks 45 leading stocks, also advancing by 1.94%. The positive movement in regional markets, including Japan's Nikkei and China's Shanghai index, was influenced by investor optimism following the U.S. Federal Reserve's latest meeting minutes. These minutes suggested a potential interest rate cut, as Fed officials expressed concerns about the labor market, although they remain cautious about inflationary pressures. Domestically, Bank Indonesia reported a year-on-year retail sales growth of 3.5% in August, a slowdown from July's 4.7%. Despite this moderation, the central bank highlighted ongoing resilience in production and consumer spending, aided by government stimulus measures. Within the IHSG's sectoral performance, the non-primary consumer goods and primary consumer goods sectors also showed gains, while technology, energy, and property sectors saw declines. Market transactions were robust, with over 37 billion shares traded, amounting to a total value of Rp 30.27 trillion. The overall market activity indicates a cautiously optimistic outlook among investors, buoyed by both global cues and domestic economic resilience.
LinkSquares, a provider of contract lifecycle management, CLM solutions, has announced the results of a total economic impact study conducted by Forrester Consulting. The study reveals that organizations using LinkSquares AI-powered CLM platform can achieve a 360% return on investment, ROI, over 3 years, with a net present value, NPV, of $2.1 million and a payback period of less than 6 months. These findings are based on a composite organization that synthesizes the experiences of 5 decision-makers familiar with the platform. The study highlights significant financial benefits and efficiency gains, including a 30% reduction in contract processing times and a 20% decrease in revenue leakage by the 3rd year. By centralizing workflows and automating approvals, the platform helps organizations streamline operations, reduce legal and financial risks, and enhance strategic business partnerships. The AI-driven capabilities of LinkSquares enable legal and business teams to minimize time spent on contract reviews and escalations, thereby freeing up senior leadership and improving overall operational efficiency. These results underscore the transformative impact of LinkSquares' platform across various industries, reinforcing its role as a critical tool for businesses seeking to optimize contract management and drive financial performance. The study provides a framework for evaluating the financial impact of deploying LinkSquares CLM, potentially influencing decision-making processes for enterprises. LinkSquares CEO Chris Combs highlighted that the findings validate the significant value their platform offers, enhancing its market position by demonstrating its efficacy in delivering tangible economic benefits.
Domino's Pizza has become the most shorted public company in the UK, as hedge funds, including BlackRock, Citadel, and Marshall Wace, bet against its share price. Despite a recent £20 million share buyback initiative intended to support its stock, Domino's shares have plummeted by 24% over the last 3 months, reaching a decade low. The company faces mounting challenges such as rising labor costs and sluggish consumer confidence, which are exacerbating its financial woes. The Financial Conduct Authority's data indicates that short positions now account for at least 10% of Domino's total stock, reflecting significant investor skepticism about the company's future performance. The company's efforts to stabilize its market position have been complicated by internal and external pressures. A recent 5-year framework deal with franchisees, intended to mend relations and foster growth, has inadvertently increased operational costs and dampened shareholder returns. Analysts at Deutsche Bank downgraded Domino's from a buy to a hold, citing concerns over profit-sharing agreements with franchisees. This development highlights the broader challenges facing the retail and hospitality sectors, particularly in the competitive fast food and home delivery markets. The situation underscores the delicate balance Domino's must maintain between franchisee satisfaction and shareholder value.
The recent departure of Anant Narayan G., a senior official at the Securities and Exchange Board of India, SEBI, marks a pivotal moment in the ongoing investigation into Jane Street, a prominent U.S. high-frequency trading firm. Narayan, who concluded his 3-year term, was instrumental in leading the probe into alleged market manipulation by Jane Street, which had been temporarily suspended from trading in India's securities market in July. The investigation is at a critical stage, with a potential for a broad-reaching final order. Jane Street has contested the allegations and initiated an appeal, arguing that SEBI has not provided essential documents for its defense. An Indian court has intervened, pausing SEBI's final orders until a hearing scheduled for November 18. Narayan's tenure at SEBI was marked by significant regulatory measures aimed at cooling India's derivatives market and enhancing transparency among foreign investors. His efforts included advocating for increased disclosures by investment vehicles and offshore funds, as well as reforms to mitigate retail participation in equity derivatives, where a majority of traders incur losses. These initiatives, now left for his successor to advance, include proposals to extend the maturity of derivative contracts and introduce product suitability rules to better protect retail investors. The outcome of the Jane Street investigation and the continuation of Narayan's reforms are expected to have substantial implications for market regulation and foreign investment in India.
Duke Energy Corporation, NYSE Duck, has seen significant activity among institutional investors, with Trifecta Capital Advisors LLC notably increasing its stake by 2,284.6% in the second quarter. The fund acquired an additional 297 shares, bringing its total holding to 310 shares, valued at approximately $37,000. This move is part of a broader trend where major investors like GQG Partners LLC, Nuveen LLC, Raymond James Financial Inc., and Vanguard Group Inc. have also significantly increased their positions in Duke Energy. Institutional investors now own 65.31% of the company's stock, indicating strong interest and confidence in the utilities provider's future prospects. Duke Energy's stock performance has been supported by positive analyst sentiment, with several firms adjusting their price targets upwards. UBS Group, BMO Capital Markets, and JP Morgan Chase & Company have all issued favorable ratings, contributing to an average target price of $133.08 and a moderate buy consensus. Despite missing its earnings expectations slightly in the last quarter, Duke Energy reported a 4.7% year-over-year increase in revenue to $7.51 billion, underscoring its solid operational performance. The company also declared an increased quarterly dividend, reflecting its robust cash flow and commitment to returning value to shareholders. With a market capitalization of $97.44 billion and a stable dividend yield of 3.4%, Duke Energy remains an attractive option for investors seeking stability and income in the utilities sector.
Orion, a leading wealth tech firm, has unveiled a revitalized visual identity that aligns with its current market momentum and future aspirations. This rebranding initiative follows a significant year for the company, marked by surpassing $5 trillion in platform assets. Orion's growth outpaces its industry peers, driven by both organic expansion and strategic mergers and acquisitions. Alongside the new branding, Orion has introduced a comprehensive investment framework aimed at simplifying how advisors assess and implement investment strategies, further solidifying its commitment to enhancing advisor success. The firm's strategic moves underscore its position as a formidable player in the wealth tech sector, a rapidly evolving industry that combines technology and financial services to improve wealth management processes. Orion's advancements are likely to impact market sentiment positively and could influence the company's stock performance if it were publicly traded. The introduction of a unified investment framework could streamline operations for financial advisors, potentially increasing efficiency and client satisfaction. As Orion continues to innovate and expand, it sets a benchmark for competitors in the wealth management technology space.
RBI Governor Sanjay Malhotra has called on India's fintech sector to play a pivotal role in crafting a financial system that is inclusive and consumer-centric. Speaking at the Global Fintech Fest 2025 in Mumbai, Malhotra emphasized the transformative power of fintech in democratizing finance and empowering citizens. He highlighted India's world-class digital public infrastructure, such as UPI and Aadhaar, which has significantly enhanced service delivery and financial inclusion. The governor also noted the similarities between the fintech ecosystems of India and the UK, both of which are leading jurisdictions in terms of fintech startups and investment inflows. Malhotra urged Indian fintech companies to prioritize the development of user-friendly products tailored to underserved segments of society, including senior citizens and those with limited digital literacy. He stressed the importance of building inclusive systems that expand financial services access to unserved populations rather than focusing solely on the privileged. This approach, he suggests, will not only deepen financial inclusion but also contribute to sustainable growth in the fintech sector. The governor's remarks underscore the potential of fintech to drive economic transformation by fostering financial inclusivity.
Manpower Group Talent Solutions has been recognized as a leader in recruitment process outsourcing (RPO) services across North America by the Everest Group, achieving a global triple leader status. This accolade highlights the company's innovative approach to tackling global talent shortages through advanced AI-driven strategies. With traditional hiring methods proving inadequate in the current competitive labor market, Talent Solutions has integrated consulting, recruitment marketing, and strategic workforce planning into its RPO services, significantly reducing the average time to fill positions by up to 40% in North America alone. The company's AI-powered platform, PowerSuite, has been a critical differentiator, enabling employers to streamline recruiting processes and enhance candidate experiences amidst tight labor markets. This platform, along with initiatives like Ignite Recruitment Marketing and Strategic Workforce Planning, positions Talent Solutions to effectively address workforce challenges by providing predictive insights into talent supply and demand. As global workforce shortages persist, Talent Solutions recognition underscores its capability to deliver scalable, innovative solutions that align with evolving market needs, reinforcing its leadership in the RPO sector.
Safety Shot Inc. has announced a strategic rebranding to BoG Inc., with plans to trade on the Nasdaq Capital Market under the new ticker symbol BINC starting October 10, 2025. This transformation aligns with the company's shift towards becoming a significant player in the digital asset ecosystem, particularly within the decentralized finance (DeFi) space. The rebranding follows BoG Inc.'s acquisition of a revenue-sharing interest in LetsBonk.Fun, a successful meme coin launchpad, and the accumulation of a substantial treasury of BoG tokens. By positioning itself as a public market proxy for the BoG ecosystem, BoG Inc. aims to create long-term shareholder value through its integration with DeFi platforms. The company plans to leverage its revenue streams from LetsBonk.Fun and actively manage its BoG tokens to enhance shareholder value. CEO Jarrett Boone highlights that this strategic direction provides a clear path to unlocking significant shareholder value, as the company focuses on building a leading digital asset treasury. The rebranding underscores BoG Inc.'s commitment to bridging traditional public markets with the burgeoning digital asset space, offering public investors direct engagement with DeFi opportunities. The continuity of CUSIP numbers for common stock and warrants ensures a smooth transition for shareholders, requiring no immediate action on their part. This development marks a significant shift in the company's strategy, potentially impacting its market positioning and long-term shareholder value.